let's jump into the vol. So on the vol side of things, realized vol did bounce back into the 40s as spot tested 38K, but then failed to hold the level. Carry remaining positive on Bitcoin as implied vol held. So, even though realized is kind of in the high 30s now, implied have kind of stayed around 50 odd. So you've got positive carry, and you've had these bars here have been in positive carry for well over a week now in Bitcoin. So they're not, the gamma sellers just haven't been as enthusiastic to go and smash out gamma, even though implieds are quite a bit higher than realized right now. Now, obviously, the big spike in realized came from Ethereum as it had a 20% up day. So 10-day realized went up towards 60. Short dated implieds obviously caught a bit as well. That was up by order of magnitude about 10 vols at one point. And that's obviously reflecting the fact that it's ETH-led volatility. Volatility carry got reduced down to close to zero. That move. And as we say, the 2150 is the key resistance area. If that breaks, there is scope for a much bigger rally. And with the market kind of being aware of that, it may keep gamma sellers on edge and maybe keep gamma sellers away for now until we get a decent amount away from 2150, that the risk of breaking it is much lower. Then the gamma sellers might get a bit more comfortable. Okay, so if we can get down back towards 1900 on ETH, then maybe the gamma sellers will be empowered then. But whilst we're anywhere above sort of 2000, I think gamma sellers look to be quite nervous. Okay, call overwriting. So call overwriting against long holdings, it was a bit of a no-brainer, because as we rallied into that resistance, the odds of that resistance holding on the first test were quite high. And as we rallied, because the vol spiked, selling some calls in that spike, if you already hold Ethereum or if you hold longer dated calls, that was a fairly obvious trade. And we did execute some of those, as you guys know who got the trade alerts. We sold some higher strikes in December because we just thought they were a bit too juicy not to do something with. Okay. Now, in general, less systematic supply now. Vol levels, Ethereum vol levels should be a bit more reflective of the actual moves that it's achieving, right? And we are starting to see that now. So rather than Ethereum vol trading cheap, like has been the case for most of this year, it looks like the moves are actually going to determine where the vol trades. That's like it used to be before we had all this systematic selling flow. So you could well be back in that old sort of regime where ETH trades a lot more freely and actually has a higher beta than Bitcoin does. So that could be the world we're now moving back into. Looking at the term structures, you can see a bit of a difference there. Bitcoin very slightly bid in the front end, in the gamma buckets, basically, for the first couple of weeks. And then you're seeing Vega offered. So anywhere between sort of 1 and 3 vols across the curve, with January the worst hit there. Now, I think the front end, looking at where the curve is quite flat now. So the front end might struggle to hold this bid. If realized doesn't catch up and actually start, delivering some realized volatility in Bitcoin, then this front end is going to get hit and you're going to go back more to a bit more of a contango. Now, the curve is very flat again in Ethereum as well, catching a 7 vol bid in the front. That's a bit time weighted for the rest of the surface. So obviously the gamma really driving the gains here, but that gamma has been performing. And whilst if ETH does continue to swing around and we do get more headlines around ETFs, etc., then this curve maybe can hold. Otherwise, a couple of weeks of nothing going on, you'll see a similar story where this will collapse back into some sort of contango. But it may well be that only really short-dated options like 1 to 2 weeks are the ones that get hit, and then it might contain a bit of a premium because they know at any point there could be a headline around the ETFs that kind of gets the market moving again. Okay, so that's what we're seeing there. In terms of the vol spread, so no real surprise that we've got a big shift higher from those surface moves. So last week we had the front end in a 5 vol ETH premium. That's continued to go higher to a 10 vol premium. You can see the 10-day realize is nearly 20 vols in favor of ETH, and the entire curve has shifted higher. So now you've got the back end at about 3 vols ETH premium. You've got the 1 to 2 month stuff at about 5 or 6 vols, and you've got the absolute front end at 10 vols. So we had a really big repricing. You can see here back to kind of levels that we haven't seen pretty much all going back to sort of May. This is right. So that's 6 months. We haven't seen these sort of levels in over 6 months, and it is because the realized really is significantly higher in ETH, and people now believe that that is going to have its own narrative, and that's going to drive more vol going forward. The distorting force of the systematic sellers has gone away. And for BTC vol to get back above ETH again, you would need to see BTC realizing more than ETH consistently for a couple of weeks for the narrative and the positioning to shift again. But I mean, I'm starting to think that's unlikely. And when we look at the gamma positioning, you'll see in a minute, it's gonna require quite a lot for that sort of condition to come back. Okay, so let's move on to the SKEW. So the SKEW, again, the SKEW was kind of the reason why I did those ETH versus Bitcoin call switches a week and a half ago was because the SKEW moves in ETH were getting quite wild, right? So we were getting, we were starting to push above 1900 and weekly call SKEW was going crazy for ETH. And that to me was kind of telegraphing that something's going on here because ETH SKEW is catching a massive bid. Bitcoin's the one that supposedly got the ETF narrative. What's going on? And that's what led me to do that trade. Now, obviously, it looks like people were front running the news that eventually came. Whether anyone actually knew that was happening or not, who knows? Or they just got lucky. But that was the point. But anyway, the point I would make now is that we reached call SKEW of 10 vols or so in both Bitcoin and Ethereum, and now they've reverted back. So they're in line with each other. So there's no real difference between the SKEW levels in Bitcoin and Ethereum, but they've kind of given back half. So they're back to about 5 or 6 vols, still in call premium, but they've kind of hit their highs and come back down. So as the market tried to test those big resistances and failed there, the SKEW was as bid as it's been. And then as spot has dropped back down, the SKEW has come back with it. Okay, so that's kind of the way the SKEW has behaved. But it's kind of now a case of we had such a big move, 12% in a day on Ethereum, that you actually saw some profit taking come from people who had bought calls as well. So that kind of helped that extreme call premium in Ethereum subside a bit as some call profit takers came along and were happy to let go and kind of bank their profits, basically. So right now, there's no major difference between Bitcoin and Ethereum SKEW. They're kind of trading in line with each other. We actually think Ethereum should probably hold a little bit more of a bid than Bitcoin because that's the one with the explosive potential on the upside. As we said, if it breaks 2150, we could do a quick 20%. I wouldn't be that surprised. And the timing on that is very difficult to call. I don't know when it's going to happen, but I would say, though, that scenario is extremely likely at some point in the next three months, maybe 6 months. Who knows? So we still like the call switch trade, ETH calls versus Bitcoin calls. We think that continues to make sense. We don't think Bitcoin is going to be as explosive to the upside, even if it has good news. And therefore, we think it's going to struggle to move materially past 40K, right? So we think selling stuff above 40K strikes to fund some Ethereum upside, as we've done, is still the way to go. Okay, so that's what we're seeing there. Looking at a dashboard, selling calls is obviously flagging as the trade, given that spot is still quite elevated and vol is quite elevated. So selling calls on Bitcoin is screening as a decent trade. It's in positive carry, obviously. So if you do have some Bitcoin holdings, it's been working great, selling calls systematically. I've been doing it in my portfolio. I've been selling 1 week calls every week and rolling them. So I've been using those to kind of overwrite against some core longs that I've got in December options. So that's been working pretty well. And then here we've got 8% up on the week in terms of spot, 5% up in vol. That is back to selling calls, but like I said, I just think that's too dangerous, right? Selling calls in Ethereum, knowing that this technical level is massive, and if it breaks, and the fact that the story in ETH has only just really started, makes zero sense to sell calls in Ethereum right now for us in terms of outright. Obviously, if you've got holdings and you might want to overwrite a portion of your holdings, that's totally fine because the vol is pumped and you can earn some yield off that. We just wouldn't want to oversize it to get taken short Ethereum, right? Ethereum could easily go another 15-20%. So to go and oversell calls, we think is not the right way to go right now. Okay, let's look at the flows then. So option flows, volumes were up 35% on Bitcoin this week, up to about $8 billion as spot broke higher. The predominant flow really that we're seeing, if we look at where all the biggest bars are on these block trades, it's the rolling up of calls again. So people are like, as we hit 38K, they are rolling from 37 and up, 38 and up. both in November and December. So they're kind of rolling 37 to 38K strikes into the 40 to 45K. We also saw some December outright buyers on the 45 line. We did see some sellers of January 50K and above as a funding leg to buy some December closer strikes. So that's a bit of a vol play, that kind of diagonal calendar call spread. And then we also saw some protection activity in the very front end as well, in kind of this week and next week, puts and put spreads. So that's really what we saw in Bitcoin. In terms of Ethereum, the flows were more sort of cool, more buying, generally just buyers of vol everywhere. 30% increase in volumes, so not quite as high as the increase in Bitcoin, interestingly enough. In terms of November, these big green bars, that's the 2,000 and 2,100 strikes getting bought in straddle form, covering shorts and entering fresh long vol positions as it was working. The 1st of December, 2150 straddle was bought against Bitcoin. So there was a relative value switch in the 1st of December that was done because people thought there was value in owning Ethereum Gamma relative to Bitcoin Gamma. We also had some fresh buying of November call spreads, 2,700. We had some very out of the money December calls, the 4,500 calls traded in December. They're not worth a lot, but they give you lots of convexity to a massive re-rating. And then in general, we're just seeing funds, crypto funds that were on the Bitcoin upside trade for a while, switching that trade now over to Ethereum, which is why we saw the Vega part of the curve offered in Bitcoin, but very well bid in Ethereum. Again, that's what took the vol spread back into positive territory as everyone's doing that switch. And that's a switch that we did about 10 days ago. And then the funds have then come in and continued to do that trade. Okay. So gamma positioning. So we said Ethereum flipped short last week, and that was definitely a potential catalyst for more movement. And we certainly got more movement when it moved 12% in a day. But obviously it needed a catalyst to make that move happen. BTC also in negative gamma. It's been in negative gamma for a while. It actually dipped quite negative into expiry, but has kind of normalized there. You can see a big lot of short calls between 37 and 40K. Those purple bars represent next Friday, and the red bars are this Friday. So generally short dated upside from here all the way up to 40K. The street is still short. The dealers are still short. Then Ethereum Gamma down here, it hasn't spiked massively more negative, but it's quite stable. But again, all the local strikes between 1900 and 2200 looks like the dealers are short out for this Friday and for next Friday. So clearly the street is not in a comfortable long vol position. That's why BTC vol is staying elevated, and we've got positive carry because the dealers aren't letting it come down because they're already short and they don't want to sell more. And we've got a similar condition kind of building here in Ethereum. So even if Ethereum realized does come down, it's not given that they're going to take the implies down as well if they're all sitting there short. The way it works, market makers who are really short vol are going to be more likely to hold the vol at the higher price so they don't get taken more short. And even if it starts not realizing, they're happy to collect their money via time decay, via theta, than forcing that vol lower in the risk that they might get lifted out of more and not be able to get any vol back. And because this thing can go through episodes of a week of doing nothing and then suddenly move 10%, it's quite dangerous to then get taken out of a load more vol. So that's what I expect will happen. I expect positive carry will come back in the Ethereum options. Okay, that's the summary for this week in crypto. Thanks a lot as always. I'll catch you guys later.